On Business Incorporated today, oil slips as market awaits OPEC Plus response to U.S.-led crude release. South Sudan to host regional Nile Basin initiative meeting on Friday. Plus, we look at the Nigeria's Borno state as businesses in Maiduguri struggles to recover without power. Thank you for joining us and welcome to the program. I'm Chimeze Obi Iwa. We'll begin with market numbers starting off from Africa, where sentiments were mixed at intraday. Nigeria's main index was down 0.21%, while South Africa's JSE index rose by 0.07% at intraday. Similarly, Egypt's benchmark index rose by almost 0.5% at intraday, while Kenya closed Wednesday's session negative, down over 1%. Over to the Middle East, major indices traded positive at intraday. The Abu Dhabi main index was up 0.58%, same as Dubai's index, 0.37%. Elsewhere in the region, Saudi Arabia's main index was also up by 0.74%, and the Qatari exchange rose marginally by 0.01% at intraday. And to Europe now, stocks advanced in early trade as investors continued to monitor the COVID crisis in the region and political developments in Germany. For more, let's bring in Chiponda Chibelu to tell us. Hello, Chip. Thank you for joining us and good afternoon. Hello. Now, Germany's post-Merkel coalition has set out its agenda in the coalition deal that it announced yesterday, but that comes as the COVID infection spike and the country passes the threshold of 100,000 deaths. What do the next government say about how it plans to tackle the pandemic?
Yeah, the pandemic, of course, is the big deal for the next government and, of course, also for the current government. What it said in terms of how it plans to tackle the pandemic, the first thing that Olaf Scholz mentioned was establishing a crisis task force, an emergency task force that will deal with the coronavirus specifically. That would be based within the Chancellor's office. So Olaf Scholz is the next German Chancellor, and he talked about, of course, having regular exchanges with this team of people who will be tasked with solving this problem that we have. Of course, the government has already been working on that, but what they haven't had is a specific task force dealing with the problem. Olaf Scholz also mentioned the potential of a vaccine mandate for some jobs where people come into close contact with those who are vulnerable, like the elderly or people in hospitals, because of course those unvaccinated workers in those cases can help spread the virus. And a vaccine mandate is what we're yet to see, at least here in Germany, because of course there's also a correlation between areas where there's low vaccination rates, and now we're seeing apparently high, infection rates. In fact, the infection rates are only going higher every single day, apart from that 100,000 threshold mark that you mentioned in terms of deaths. So the pandemic is on the minds of the government, it's also on the minds of the people. The latest consumer sentiment survey from the GfK poll shows that consumers are downbeat when it comes to this holiday season, and that means that there's going to be potentially less retail and of course less activity when it comes also to the services industry. So it is weighing on consumer sentiment as well, which of course has also been contributing to the economic recovery here in Germany.
Well, Chief, all I can say is that you and your team should just stay safe. Anyway, can you tell us more about its economic plans?
Economic plans, of course, this is a coalition of the SPD, the Social Democrats, the Greens, and the FDP. And of course, with the Greens, it's a lot also about climate change. So they've pushed up a lot of goals for, for instance, for exiting the coal industry. They've moved that up from 2013. The current goal was 2038 to 2030. Now that's the goal for exiting the coal industry. And the next government wants to double the amount of renewable energy from the current share we have, which is 40%, to 80% by 2030 as well. And it also hopes to reduce the number of carbon emissions by 65%. So that's a lot of ambitious goals when it comes to climate change, of course. And they also have a lot of infrastructure plans. They want to invest a lot in infrastructure. Germany has lagged behind when it comes to infrastructure investment compared to its European peers. So the government wants to do that. But of course, there's also some criticism of its ambitious climate change goals, but also of its goals with infrastructure investment, because of course, there's a lot of costs involved with a pandemic. And of course, investing in infrastructure could also mean more money by the government spent. And a lot of people are asking just how the government would do that, given that they are not going to lift the debt brake that the German government has. So there is no chances of a government budget deficit to do that. And that's part of the criticism that we've seen from, well, critics of the next government.
And across the Atlantic, the U.S. Fed minutes from its October policy meeting point to faster tapering. How are investors where you are reading into it?
Well, when it comes to faster tapering, that is not the big surprise, because of course we knew that the US Fed was worried about inflation. So obviously, in order to be able to fix inflation, they might need to, quicken the rate of tapering to be able to lift interest rates. But what we've seen from the reading, we've seen that they are expecting perhaps not 2, but 3 interest rate hikes from the US Fed next year. So that's something slightly different. But of course, the investors haven't been very negative or pessimistic about what we've seen from the US Fed minutes from October, because everything, the overheating and even the inflation rate, points to an economic recovery from the United States. And that's helping sentiment on the markets, despite, of course, the bad news here in Europe with COVID infections.
All right, Chi, great to have you bring us up to speed with those developments there. Looking forward to talking to you again tomorrow. Enjoy the rest of the day.
Thank you, Jimmy.
And in Asia, shares were mixed in Thursday trade as investors reacted to the Bank of Korea's rate decision. South Korea's Kospi dipped 0.39% after the Bank of Korea raised its policy rate by 25 basis points to 1%, a move that was largely expected by analysts. In Hong Kong, the Hang Seng Index gained 0.12%. Mainland Chinese stocks declined, with the Shanghai Composite shedding 0.1% and the Shenzhen Component falling 0.236%. Elsewhere in Japan, the Nikkei 225 gained 0.79%, while the Topix Index advanced 0.4%. Australian stocks wavered between positive and negative territory, with the S&P/ASX 200 last hovered fractionally higher. MSCI's broadest index of Asia-Pacific shares outside Japan was little changed. And in the U.S., markets are closed today for Thanksgiving holiday and will close early on Friday in shortened session. However, stocks pushed modestly higher on Wednesday as the recent jump in bond yields took a breather, allowing tech stocks to recover. The S&P 500 ticked up 0.23% to close at 4,701.46, while the tech-heavy Nasdaq Composite added 0.44% to finish at 15,845.323. The Dow Jones Industrial Average lost just 9.42 points and settled at 35,804.38. The recent rise in yields, which started around President Joe Biden's decision to renominate Jerome Powell as chairman of the Federal Reserve on Monday, cooled slightly on Wednesday. The minutes from the latest Fed meeting released on Wednesday showed that the central bankers were ready to accelerate the timetable for slowing asset purchases and raising the benchmark funds rate if inflation remains high. Stocks moved lower after the minutes were released. The market did receive some bullish news on the economic front. Initial jobless claims for the prior week came in at 199,000, the lowest level in more than 50 years. GDP growth for the third quarter was revised up slightly to 2.1%, though economists expected it to rise to 2.2%. Personal income and consumer spending both rose more than expected in October. And global oil market prices ticked lower in early trade, with investors waiting to see how major producers respond to the emergency crude release by major consuming countries designed to cool the market, even as data pointed to healthy U.S. fuel demand. U.S. West Texas Intermediate crude futures fell 9 cents, or about 0.1% to $78.30 a barrel, extending an 11 cents loss on Wednesday. Brent crude futures slipped 5 cents to $82.20 a barrel after losing 6 cents on Wednesday. All eyes are now on the Organization of the Petroleum Exporting Countries, Russia and allies, together called OPEC Plus, who are due to meet next week to discuss oil demand and supply. The group has been adding 400,000 barrels per day of supply each month, unwinding record output cuts made last year when pandemic curbs slammed demand. And on metals market, gold prices edged up in early trade as the dollar eased slightly, but comments from U.S. Federal Reserve policymakers suggesting the central bank could accelerate stimulus tapering weighed on the metal and kept it well below the key $1,800 mark. Spot gold rose 0.2% to $1,792.05 per ounce after slipping to its lowest since November 4 on Wednesday. U.S. gold futures added 0.4% to $1,791.70. The dollar index edged 0.1% lower off its highest in 16 months hit on Wednesday, reducing the metal's costs to buyers holding other currencies. Spot silver rose 0.5% to $23.64 per ounce. Platinum gained 1.2% to $986.27, and palladium was up 0.7% at $1,864.29. And away from the markets, we turn our attention to Maiduguri, the capital of Borno State, northeastern Nigeria. Borno State, for years, has been the epicenter of Islamist militants' attack. Our next report looks at how businesses are struggling to recover without power.
A wiring machine churns out reams of paper at the Gaza printing press in northeastern Nigeria's Maiduguri as owner Garba Zango supervises. The copies are perfect, but the past 10 months have been the toughest of Zango's nearly 50-year career as his business, like the rest of Maiduguri, struggles without power from the national grid.
We used 2 generators in shift. But at that time, the gas was okay, the price of gas is okay, diesel. But now it has gone to an extent that every day, if we have to work, we have to buy 9,000 naira gas every day. Unless if there is no work, then we can manage and sit down like this. And to be honest, not only printing, but everything has been affected.
Seller Mohammed Bono says he can only afford to run 4 of his 40 freezers and had to cut his 300 employees down to 50, have made a near doubling in diesel costs.
When we are using electricity, we can able to own all of our fridge at the same time. But by using gen, we are using only 4.
Out of how many?
Some, they have 10, 15, even 20. You can only using 4. This causes loss to us in our business.
Workers fixed the transmission lines in January, but militants destroyed them within 48 hours. In February, a repair vehicle hit an improvised explosive device, killing 1 soldier and injuring 3 workers. The destruction left residents sweltering inside, struggling to sleep, and reliant on expensive polluting fuel generators to do business. Nigerian oil company NNPC also pledged in August to build a 50-megawatt gas-fired power plant in Maiduguri to cut its reliance on transmission lines. But the timeline for both the plant and repair to the transmission lines remains unclear. Even where demand thrives, businesses are hobbled. The problem is stifling the city's economy, which itself is crucial to security in the Lake Chad region.
This has now thrown a spanner in the works because it's increased the cost of doing business in the city. It's pushing some people back into poverty, and it's just affecting the general economic life in the city. So you have a higher cost of doing business, which is being transferred to the cost of goods, and then that is reducing the demand for goods by the normal.
While residents remain hopeful, many have sought alternative power forms like solar as cost of fuel continues to rise in the country.
Still ahead, we'll look at more details on commodities market update. To stay with us. On commodities market update, we're looking at flour. Now, flour milling industry in Nigeria is an oligopoly, which is likely to become a cartel following the news that Flour Mills of Nigeria is set to acquire a majority stake in Honeywell. This has jolted some consumer protection groups. This is because the total market share of Flour Mills Nigeria will increase to 48% from 40%. The other dominant player is Olam, with 40% market share. This, no doubt, will have some implications for the price of flour and, of course, on the consumers. Let's bring in Favour Ogunirai, research analyst with Financial Derivatives Company, to tell us more. Hi, Favour. Good afternoon. Good to see you.
Thank you for having me.
So the price of flour has increased by 151%. That's in 12 months. Now, with the plan of Flour Mills of Nigeria to acquire a majority stake in Honeywell, what will the impact of this further consolidation on prices and of course, consumers? Are consumers likely to be exploited?
Based on the intended consolidation between Flour Mills of Nigeria and Honeywell Flour Mills, the industry is almost now a duopoly where, two players dominate an industry. And one of the things that could occur is collusion between these dominant players to control price, or we could see intense competition between them in order to increase market share. But then one of the things that you need to consider is the economic state of the country and also the reducing purchasing power of consumers. And, considering that it's very unlikely that collusion is the best course of action for any of these dominant players, because revenue is actually really gotten from, how much volume of goods are being sold rather than the price. So the target market here is the mass market. So what we should expect to see is, intense competition between Olam and the consolidated Flour Mills of Nigeria and Honeywell Flour Mills, and that would then result into innovative product, price competition, and even increased marketing strategies. And then for the price of flour, we can't really say for certain that the price will decline because we still have lingering insecurity and logistics constraints. But what we can say is that we do not expect antitrust behavior to commence anytime soon.
Yeah, now the central bank is to spend about 41 billion naira to reduce wheat importation of $2 billion annually. Given that it will take a long time to see the desired impact, do you think that this consolidation will help reduce the country's dependency on wheat importation?
So for Nigeria consumes about 4.7 million tons of wheat, and then we only locally produce about 1 to 2% of that. So that means about 98% is being imported. So the CBN really is in the right direction to boost local production, even though it might take a while for us to actually see the impact of it. But then companies like Flour Mills of Nigeria have actually taken on that initiative to, adopt backward integration strategies where they acquire and merge with the supply chains, and they've done that by increasing investments in local production of wheat, sugar, cassava, maize, and the likes. And they've also gone ahead to even partner with farmers, in terms of input provision and also training and support. And we've also seen Honeywell being involved in a backward integration program. So the consolidation of these two companies would help harness the resources, the capabilities, and the capacity of both companies to transform the supply chain and intensify and increase backward integration, which is positive for the industry in the long run.
And then the price of flour and other wheat-based consumer goods has increased in the last 12 months. On the other hand, the prices of rice, yam, and gari have also declined by 13%. We have 20% and 3%, in that order. Should we expect to see some kind of increase in the demand for these substitutes?
Well, the reality is that consumers' behavior and consumption is a function of their income. So while the prices of flour, bread, noodles have increased, the consumers' disposable income hasn't really. So it's natural for them to either reduce their consumption level if the commodity that has suffered an increase in price is not really considered a necessity, or then they will be forced to actually shift and then consume other substitutes whose prices have been declining, which in this case we have yam, we have gari, we have rice as well. So we could see that play out and then see an increase in demand for these substitutes.
All right, Favor, we do appreciate your time. Thank you, and enjoy the rest of the day.
Thank you.
And in South Sudan, the Ministry of Irrigation and Water Resources has announced plans to host the 29th Nile Council of Ministers in Juba on Friday, November 26. The Nile Council of Ministers is a regional bloc that comprises of 10 countries. The ministers are withdrawn from Burundi, DRC Congo, Egypt, Ethiopia, Kenya, Rwanda, South Sudan, Sudan, Tanzania, and Uganda. During the meeting, key Nile Basin applications and the Nile Basin Atlas will be launched by the guest of honor, the Vice President of South Sudan, James Wani Iga. The Council of Ministers from the member states will discuss the annual plan for the Nile, and it will focus mostly on approving the budget for next year. Several meetings on the tax for groundwater steering committee are also taking place in Juba, including a meeting for tax members secretariat, which will also be approved by the Council of Ministers on the same day. Algerian dairy cow breeders say the country can achieve self-sufficiency in milk production if they are provided with additional grassland. The government spends $1.3 billion a year on milk imports, yet it is often unavailable in Algerian shops, reflecting wider problems with domestic food production and distribution in the still largely state-run economy. Let's watch this.
Algerian dairy cattle breeder Ibrahim Bouacha believes his country can end its very costly milk imports if the government delivers on promises to encourage farmers. With state revenues pressured by lower oil prices and output in recent years, Algeria has had to draw heavily on its foreign currency reserves to finance import of foodstuffs including milk as well as other subsidized goods.
We are at the lowest levels of milk production and we have not yet reached self-sufficiency. For several reasons, for example, the lack of green grass and the very high prices of fodder, the farmers are sometimes forced to sell 2 or 3 cows to be able to feed the other cows.
With a total annual bill for imported foodstuffs of $19 billion, the government is eager to increase domestic food production as it cautiously moves to reform parts of a largely state-run economy long dominated by oil and gas. Farmers like Bouacha have long complained about high taxes as well as costly animal feed and bureaucratic hurdles that they say hold production back.
To increase the number of cows, we must provide more land, because each dairy cow needs at least 1 hectare. We've had the same number of dairy cows for 10 years. If we had more land, we could raise the number of cows. There is also a rise in the price of material.
Bouacha also hopes the government will lift its freeze on drilling wells imposed to preserve groundwater reserves. This would help irrigation for grass and winter fodder after recent years of drought. Agricultural Minister Abdul Hamid Hamdani has said he wants to increase Algeria's dairy herd to 20,000 cows from 8,000 by 2024. The government currently guarantees a purchase price for milk and offers bonuses for higher production rates. Agriculture already generates 13% of Algeria's economic output and employs 2.5 million people. However, the sector is dependent on rainfall, pays workers poorly, and says little technological innovation that could stimulate further growth.
All right, with that, we call it a day on today's edition of the program. Thank you for watching. I'm Chimeze Obi. You're welcome.